Hello guys, Tomasz here and welcome to this new video. In today's video I'm going to talk about the refined M15 swing strategy. So just before starting, please do not skip any of the previous LC content. Even though it's the M5, I guarantee it's very similar, so please watch those videos as well, okay? So in this video I'm going to talk about some important points in terms of the swing photon trading plan, and also I will explain with using some diagrams and also trade examples certain things along this list. Okay, so swing photon trading plan, the main idea is to high time frame objectives. Okay, we trade always based on high time frames using the medium time frame POIs and lower time frame execution. I know this can be very simple, but I guarantee that a lot of losses came from trying to play lower time frame objectives. Okay, I'm always having the item frames on the forefront of my mind. I'm always with my H4 time frame open, see what's happening, because, and also something that you probably notice yourself, I'm just finishing the yearly ASR, which is basically going through the entire yearly trades, and the main ones, the best ones, let's say, all of them are based on item frames objectives. Okay, all of them follow those kind of moves, and when it's from the item frames objectives, the price just goes smooth. So it's very important. Item frame objective, medium time frame POI, and lower time frame execution. So I also trade the euro dollar and GBP USD. To be honest, I just stopped trading AUD USD. Okay, it's not something that stopped working, not at all. But I need to, with the amount of frequency we can have, and with the amount of opportunities, I just prefer to be a little bit more conservative and stick to 2 pairs instead of 3. Okay, there's nothing wrong. You can just trade EU and AU, or you can even trade the 3 pairs combined. There's nothing wrong with that, but I know myself, I know how I like to trade, and I'm very comfortable having those 7, 10, 12 trades per month, so I'm happy to just 2 pairs. Okay, so it's nothing wrong if you want to add Aussie dollar. So my high time frame keeps being the daily and the H4. My medium time frame is the H1, and the low time frames, as you guys know, is the M15. Okay, everything in terms of structure and supply and demand, I use daily H4 and H1. I'm not on the M15 trying to organize trade ideas, like I said, and using structure and supply. When I go to M15, which is my lower time frames, I'm literally waiting for my entry model. So that simplifies a lot of the things. Also, one thing that's very important, H1 POIs within M15 execution. This is something that I want to talk about with you, because 95% of the times, 90% of the times, I stick with H1s POIs, but I know, and I'm happy to use that experience, that when price action can be a little bit messy or have multiple POIs, I personally don't think there's anything wrong with just jump a time frame, pick an H4 POI and trade from them. Okay, again, H1 POIs 95% of the time, but I'm happy to use my experience to know, okay, H4 is super clean, let's just grab the H4 POI instead of the H1, but it's up to you, you can see which works. Okay, it's not a big deal, and yeah. So also, in terms of H1 POIs within M15 execution, I want to show you guys a diagram that I think can help. So what I'm doing, I'm basically waiting for price to, in this case, ideally be in my favor, create some kind of protected low, and once that happens, it can be ideally from a boss, but it can be an internal boss or even a change of character. It will depend, of course, in each phase you are, but basically price pulls back down, mitigate H1 POI, which is my medium time frame, and then I look for my lower time frame entry models. I'm going to talk about this in a minute, but please just focus that I wait for the pullback, and once medium time frame is mitigated, only then I can go to the M15. Okay, I don't want you guys to be on M15 around here. I'm just using lower time frames when the medium time frame POI is mitigated. Okay, it's very, very important. Essentially, this is basically what I do. And yeah, so let's now go back to the other page and entry models. Okay, entry models, something that I make, and you guys see different video for each entry model. So everything will be covered in the next couple of videos, but I want to let your brain start thinking and also give you more information. So entry models, I personally use LC1, I personally use LC2A and LC2B. Okay, let me just show you some variables. Okay, so LC2A, again guys, I made a specific video about this entry, talking about all the variables and the difference and how I classify a lower time frame lead. So please stay with me, and yeah, you guys will notice in the next couple of videos that will be available. You can just have much more information about this specific entry model with all the details, trade recap, etc. So it will be much clearer. But again, I'm just making this to let you guys start thinking, and it makes a lot of sense. So for me, LC1 is the entry model that I use, and with a lower time frame lead, I personally just looking at some opposite candle color. What that means? It means that as long as, for example, in a bullish leg, as long as it's a red candle, or like whatever the candle's color you have, but as long as it's a red candle, even though it never causes any kind of fractal pullback or even a small pullback or whatever, as long as it's a red candle, I mark as lower time frame lead. Okay, why I do that? Because I use M15. Okay, if you use M5, you can afford being a little bit more specific in your low time frame lead. But for me, I'm very, very confident, especially when I use these type of patterns. You will see again in the video specific for this entry model. But I personally use this when, for example, price is moving down and then we shift, and then we have, for example, a super small range, super tight range, ideally, and I just want to get involved. And sometimes within this leg, or even within this leg, when you're trying to catch a higher low, because on M15, these small tight ranges, price action is very tight, let's say, is very close to each other, and I don't want to say that I know what's going to happen next, but I'm very, very confident that this range can hold and price can just follow the order flow, especially the first two range within the first two ranges of the move. I know that, and I know based on my data that I can be more aggressive. So I'm happy to be a little bit more aggressive classifying low time frame lead. So basically I just classify them with a candle color. So basically it's the red candle, I'm happy to use it, or inside bars. Okay, but this will be, everything will be covered, so don't worry about that. Just let you guys start thinking. But like I said, in the first range, I'm happy to be more aggressive. So I personally don't want to miss those kind of trades where everything is aligned or just following the order flow, just because on M15 price just have a weak and trade above previous candle's high, and it's not a fractal low. So I just prefer to be more aggressive. But apart from that, I also use LC2A. You already know, is not enough, in my opinion, to reinforce the idea that's always on the PBID leg. So basically on the right side, I personally only look on the right side for this model, and the same goes for LC2B. You also will get access to a video where I show the data, and for me these two are my bread and butter, these two setups, and I'm happy to use this one, but I know the frequency is much less. Okay, it's much lower the number of LC2B trades, and I'm happy to be a little bit more conservative when using them, because I know these 2 are the best. You don't need to use this again, but there will be a specific video for each single entry model, so don't worry, everything will be covered. Just want to let you know that I personally use them. Okay, so going back into this page, fix R. So I personally go for 1 to 2. It and add commissions. Commissions on the M15 is not as high when using lower time frames, so it's it depends on the stop loss because it depends on the lot size, etc. But usually 2.1 or 15, maximum 2.2. So yeah, this is how I do fix to R plus commissions. I personally, as you guys notice, and you will see also on my stats video, my goal is always to increase the strike rate, not so much the risk reward. Okay, as human, at least myself, I prefer, and there's nothing wrong with that. I think we all have that kind of, if you don't have, well done to you, but I think as a human, we all like or appreciate being a little bit more right than wrong. So I prefer to have the strike rate above 50%. And for me, happy days. So I just prefer to focus a little bit more on strike rate. So that's why I use 2R. Please try 3R, play with Photon Excel spreadsheet, and you'll see which is the best risk reward you can get. Okay. Also, in terms of sessions, I will be covering this on the stats video, but for you just to see that I found that for me it works very well trading London. So from 7 to 10, I just put here 10, 10, because I'm not super strict, like, okay, 10 I stop trading. No, I can give like 1-2 candles, like 2 candles on M15 is like 30 minutes. So I'm still a little bit more, I understand that this is not like, okay, 10 a.m. stop trading. I personally don't think that it's that way. So I just prefer to give a little bit a window of time where I can be a little bit flexible and see if it's worth getting involved or not. But of course, the best ones are always in the first hours. As we get late in the session, I just a little bit more conservative. But yeah, that's how I trade. And I'm going to show everything about this on the stats video. You also get access. So max 2 Ls per day. It's something that I think it works. Usually with this entry model, I also had this rule long time ago, but I keep with it, especially with this entry model, because this entry model, the entry criteria is much less, so it allows you to take more trades. And usually when price reach a certain medium time frame POI, it's likely for you to get a trade. So if you have 2 Ls in a day, usually probably you not say that you did not understand what's happening, but you just end up confused, or you are just getting caught in low probability trades or environments that's not good, and that's perfectly fine. What I can do, I can protect myself and just write a rule that I just can have 2 losses per day. Okay, if you risk 0.5 is 1% per day, not a big deal. If you risk 1% like myself, it's just 2% loss. It's not a big deal. Okay. And also one that's very, very important, but still I'll covering this in the coming videos, and also there will be videos regarding this, is I do not use the PBL rule. Okay, I'm going to talk about this in specific. I will make I have a trade here that I want to show you because it will be easier when you see what I'm the price, okay, price section, but I do not use PBL rule. Okay, let me explain. Using a diagram, not this one, this one. So what I say is, imagine that this is the H1, okay? This is H1 and price, okay, this is the H1, and then everything here is the M15, okay? So let's say, let me just use the H1 here for you guys to see, and apart from, and here, so basically, let's say here, this is M15, okay, let's say. So what is the rule, why I do not use the PBL rule, and what that means? So basically, imagine that this is an LC2A, so basically price chalk bullish, chalk bearish, okay, and then if you use the PBL rule, you just draw the PBL, and if the PBL is unmitigated, once price mitigates your medium time frame POI, you can still get involved. Okay, so even though if the PBL was mitigated, then okay, that's no longer valid. But in this case, the PBL is not mitigated, so after LC to A, you keep following this extension, and once price mitigates the medium time frame POI, you could get involved. Perfect, nothing wrong with that. However, the way I do things is I do not use the PBL rule, so I just delete this, and I'm trading the pattern. Okay, I'm trading the liquidation of the pattern. So what that means? It means that once price chalk up and then chalk bearish again, and then gives you the liquidation candle, that the candle that's supposed to get triggers you in. Okay, once that candle triggers you in, because it's not in a medium time frame POI, for me the pattern itself is completed. So because it's not in a medium time frame POI, when price comes back down, I need to wait for the new entry model again. Okay, let me repeat. So once price chalk bullish and then chalk bearish, right? If the liquidation candle that triggers you in is formed, for me, the pattern itself is completed. So regardless of price of the PBL still unmitigated, for me the pattern is completed. So when price comes back into the medium time frame POI, which is the place where I can and finally use the lower time frames, I need to wait for the new entire entry model, because for me the entry model here was completed, but because the candle that triggers you in happened outside the medium time frame POI, I could not get involved, but the pattern itself is completed. Okay, so that's what I use. You can again choose which one you want to use. There is no right or wrong. Yeah, just what makes most sense to you. Okay, so now I lost I think okay, I do next time. So I want to explain you with a simple video, okay, with a trade. Let's talk about this trade, right? So basically, daily is bearish, okay? After the daily pulse bearish, daily chop. What that means? It means that price is now pulling back. Perfect. Now it pulls back to this supply. You already know I always mark the buy to sell candle, so price mitigates the daily supply. Can now this be the lower low? The lower high and from lower low? Yes, it can, because it's a daily mitigation. It can be enough to fuel lower prices. Yes, it can do other things. It can just pop down and then continue up, but at least there's room and there is potential that on the high time frames price can do this, because the mitigation is already completed. So let's see what happens on H4. So on the H4 we can see that daily boss bearish, then H4 boss bullish. Okay, the boss is here. I just mark here because it's clean, but you can just extend. So H4 boss bullish, pullback happens. Perfect, everything is nice. Now that the daily mitigation is completed, what I can do, I have two things. Or now the bullish objective is now, this bullish objective is now completed, and price will eventually form the low, or because H4 form a protected swing low, it can be a pullback into discount, right, to then continue up and make a much deeper pullback on the daily. So either way, we can see that we still have room to the downside, because even though price can do this or go down, I'm happy to look for sells. And on the H4, something that I really like is the fact that we are in the premium. Okay, this is the EQ. We have unmitigated POI below, and something that's very, very good is this kind of liquidity. So we have liquidity to target, and this increases massively the chance because it acts as a magnet and price moves towards liquidity. Okay, it's very, very important. So you all agree right? That makes sense looking for sells. And this is something that I want you guys to always understand. And you can see on all my trades that I create the analysis on the high time frames. I'm always trading in line the high time frames. And something that I really like with the swing refined M15 approach is that it almost instill you, it almost make you trade this way, always having the high time frames on top of everything, because we naturally use higher time frames, right? H1, H4. I mean, it's something that you naturally are more in touch during the session, because automatically, if you want to trade the entries on the M15, the other time frames, which is H1, H4, the daily, are the other ones, correct? So you almost automatically have more relation with them, if that makes sense. But yeah, so it makes sense for me looking for sells. And if you use the H1, what we have this H1 swing boss, and this for me was more like internal. So internally, boss bearish, making the pullback of this H1 swing leg. You can see everything combines together. We have this unmitigated H1 demand here, and this is the H4, like we said, acting as magnet for price. We also have liquidity, and if this daily mitigation is going to hold, price is going to the downside. Okay, so what we have here, we have a low that did not achieve absolutely anything. It's not coming from anything relevant for me. When it's like weak ranges and all that kind of stuff, I just prefer to or be a little bit more conservative or ignore, because I prefer to wait for those clean buy to sell, sell to buy candles. But again, it's definitely, I can see is a valid demand, but for me it's not very high probability. But anyway, what I really like is the fact that this low did not achieve absolutely anything, and then what we have, price tried to push up and aggressively push down, creating this kind of protected internal high, or you can say internal of internal, because the internal bearish was here, internal boss bearish is here. So at this moment we have an internal protected high, and we have a low that did not achieve absolutely anything. Okay, not only that, if you mark the demand itself, it was already mitigated a couple of times. So it's not something that I'm worried about. So I want to trade down, okay, in line the high time frames, knowing that this low is going to be weak. So that makes a lot of sense. So yeah, I just mark this POI, and once the price reach this POI, I will look to sell. Okay, let's see. So this is AGS session, so let's continue. AGS session, price never mitigates the POI. So we have, okay, so now what we have this low time frame lead, perfect, and price mitigates the POI. So straight away, I'm happy to look for sells. Okay, perfect. You can touch this demand, so all good. Okay, what happened next? You can see that the moment price trade higher, I immediately delete the order and I wait for candle to close. Once the candle close, it makes sense for me to look for sells. But I want to let you know one thing, that the PBL, regardless if you mark here, this weak range, that was responsible for sweep low time frame lead, or even this one. Okay, that's still a valid trade, even though you are aware of the PBL rule. But what happens? Price never tag you in, so because you have a stop order, right? You never get tagged, and what happens? The PBL holds and form a higher high. I know that some of you use weak breaks. You need to wait for a candle closure to see the PBL being completed. Okay, so if you wait for a candle closure, for you the PBL still did not do its job yet. Okay, but I think you guys are understanding, because the rule that I use is because I don't care about the PBL, I'm still looking for the trade, because this was the entry, I did not get triggered Once the next candle breaks this candle, I continue and I follow the trade while we still contain within the medium time frame POI. If for some reason you use the PBL rule with a week break, we can see that PBL here holds and made a higher high. So technically, again, if you use the week break, that's no longer a valid trade for you. That's fine. Okay, it's not better, not worse. It's just different. Okay, I'm not saying it's worse. It's just different. But in this case, I still try to get involved in the trade because I did not get tagged in this candle. So let's see. Okay, and price tags you in. In terms of target, you can map a few things. Okay, you can target the H4 POI, or because you can see on the H4 the massive amount of liquidity, you can target the liquidity itself. Okay, or if you use partials, you can even let a few percentage run to target the low in case the daily lower high will be formed. Because remember that H4 was bullish to mitigate the daily, and once the daily supply is mitigated, we can go to the downside, especially with this kind of liquidity here. So yeah, it makes a lot of sense, especially if you have a more swing approach in terms of TPs. Nothing wrong with that. But you can see the main thing I want to tell you is the fact that is the no PBL rule. So I do not use PBL. So regardless of price closing above here or not, I can still follow the trade because I do not use the rule of the PBL. And yeah, I think you guys understand. It was very, very clear, at least for me. And this would be your trade. So let's see. Price taps into the H4 POI. Okay, let's see what happens. Yeah, and continue moving down. So it's easier to say like this. Okay, and the target was completed. In this case, the best target could be the H4 demand. So for almost 5%. Okay, I personally, like I said, I use 1 to 2, but if you use 1 to 3, you will be covered on this one. So let's see, yeah, 4.69. So yeah, so that's the trade. I hope you guys can also see the rules, and yeah, let's now repeat this. So basically, okay, it's here. So right, high time frame objective, medium time frame POIs, low time frame execution. Just a very quick summary. Okay, this is what I'm doing. Then daily and H4 as my high time frame. My medium time frame is the H1, and my low time frame is M15. Structure and supply and demand, the daily H4 and H1. Again, I'm not using the M15 here. H1 POIs within M15 execution, where majority of them is H1, but I happy to use a little bit of my experience and trade on how can I say, on H4 POIs, like I said. So M15 entry models for me is LC1, LC2A, LC2B. Okay, you already know. And don't worry, this will be covered in a video, but the low time frame lead for me does not need to be a fractal pullback. It can be just a red candle. Then fix R. So I personally, at the moment of recording this video, I'm targeting to R. But remember guys, I'm always evolving the market. So if for example, I have a quarter that I can see the price is very trending, and I can see I would be more profitable or having still a decent strike rate using other target, I may evolve with the markets. Okay, I'm not saying that I'll be using this target forever, but as things stand, for me, it's the best one. That fits my personality as a trader. Then in terms of session timing, I will also make a video in the stats that talks about this. You'll be able to see that. This is the ones that I follow. Max 2 Ls per day and the no PBL rule, which I just talk about that. Okay, guys, I just talk about that. And yeah, I'm trading the pattern itself. So on the liquidation candle that triggers you win its form, the pattern itself for me is completed. So once price mitigates down the medium time frame PY, I need to wait for the entire entry model. So I do not use the PBL rule. So that's it, guys. I hope it's clear, and yeah, enjoy the next couple of videos because yeah, I think they are good. See you guys on the next one. Bye. Hello guys, Tomasz here. Welcome to this new video. I'm going to talk about LC2A using the Refine M15 swing strategy with LC models. Do not skip any of the previous LC content. Even though it's M5, the process is very similar, so I do not recommend you guys skip those lessons, right? Please watch those lessons first and then come back to this video. So GU, right? Let's start on the daily time frame. So basically we can see that we are bearish in the downtrend. Price push up, push back down. We know that after the daily boss, usually we tend to have a pullback. Okay, price swept the low, pullback, swept the low, pullback. Mitigate into premium prices, and once the premium prices is mitigated, this bullish objective may be completed, and then the lower high is then formed, right? What happens after the sweep of the low? We tend to have a pullback. So what can we expect? If you look left, we know that price after the daily pause and sweep of the lows, it tends to pull back. So we can expect some kind of a pullback, correct? And we also know that only once the premium prices are reached, for example, in this leg, price reach the premium, lower high, right? Price reach the premium, lower high. So I can expect some kind of pullback, ideally into the premium prices, EQ, right? Before lower high is created. So based on the daily time frame, we already know that we probably will be looking for longs, correct? Let's start and let's analyze the H4. Something that is also very important is analyzing the combination between the time frames. So we can see, for example, in this case, the daily, imagine daily post bearish. When do I know that the pullback of this daily bearish swing leg is going to start? Usually on H4 post bullish. Okay, so H4 post bullish, that indicates that the pullback of the daily swing bearish leg is going to start. Then on H4 post bearish, in line with the daily, the low is very likely to get run. Okay, look at this H4, right? Suddenly H4 post bullish. What that indicates that the daily bearish swing leg here to the left is going to pull back, correct? Then we reach the premium prices, and on H4 post bearish, the low is very likely to get run. So understanding this logic will position yourself in a very good scenario to capitalize on these trades, because we understand that once the H4 is aligned with the daily, we have a very likely probability, it's very probable that the low is going to get run. But focusing on the most recent price action, okay? This is where I want to talk about today. After the daily sweep of the lows, we can expect some kind of pullback. When do I know that pullback is going to start? We have a clean H4 chalk bullish, which is a very strong indication that the pullback may start. We also know that we are in discount levels, so it's worth looking for longs, playing that pullback right into the Q, right into the premium before lower high formation. So we can see that all my analysis for now are just on the daily and H4, and I I have a very high conviction what I'm going to trade when coming into the lower time frames. So it's very important for you to base all your analysis always from the high time frame perspective. Price respect high time frames very, very well. And if you get caught in the lower time frames trying to play quick moves, quick pullbacks, it will end up in disaster. So yeah, keep the high time frames on the forefront of your mind, and only then drop to the lower time frames. So let's see. H1, boss bullish after massive sweep of this low, right? You already know this one. So H1 boss bullish. What I can expect now? I can expect a continuous push to the upside because we form a very, very strong protected swing low on the H1, right? Within this leg, what we have this very, very clean POI that, if you notice, this clean POI, let me see, okay, the pullback is probably going to start. So this POI is at the discount, right? It's not only that, it's also a flip, price push up, mitigate supply, push back down and push back up again. So this is a very valid demand at the discount right after the shift in structure on the H1. So I just want to look for longs, trying to catch the higher low formation and play the bullish pullback of the H4 bearish swing leg, right? The bullish pullback of the H4 bearish swing leg, right? So let's talk about the H1. So now I'm going to start playing this forward. And by the way, guys, this is very, very important. You only look for the entry model, LC, in this case LC to A. You only look for the entry model once the medium time frame POI is mitigated. I really don't want you guys to start looking for entry models around here. Only drop to the lower time frame M15 when medium time frame POI is mitigated. You can see that I base all my analysis on high time frames, and I don't even consider going into the lower time frames unless this high probability demand is mitigated, right? So let's start. Okay, so price mitigate this POI, right? Let's now drop to the M15. There are two possible entries that I want to talk about in this video. Is one possible loss, and then the other one it's a winning trade. But let's talk about the loss first, right? If you are a little bit more aggressive and you like taking these trades, it's definitely valid, where price form this kind of LC to A. Again, remember with LC to A, it's always on a BBID leg, right? On this right side. And not only that, this kind of trades, they are definitely valid, but at least from the way I trade, I trade these trades, but I know that these trades, when price extends, as it extends more and more and more, it becomes less and less probable. The ones that are super clean, I'm going to talk about that in a minute, you're going to see. But this is nevertheless still a valid trade because we have a chalk bullish, then price break the low and mitigate medium time frame POI. That's the most important thing, okay? Because if price, for example, did not mitigate the POI, for me, I'm not even consider looking to the low time frames. But again, let's start and let's talk about this possible trade, which was a loss, you guys, and I think it was here, let's see. Yeah, so you took the trade, right, with LC to A. Again, it's not necessary, I don't consider this being high probability, but yeah, it's definitely valid, so let's consider this one. And you take a loss. Okay, perfect. Price extends quite a lot. So now let's start analyzing what happened in this recent price action. This is when things get interesting. So what happens? We have change of character, and then we need to wait for this to go, right? So perfect. LC to A is valid, correct? So now what we do is that we mark the candle, and now we want to get involved at this price. If you use the PBL method, you know that this is the PBL, correct? And if this holds, again, if this holds and price, for example, does not give you an entry and push back down, what happens? We know that price push back down, push back up, mitigate PBL, PBL held, form a lower low. So the entry is no longer valid, and you need to wait for the new LC model, the new liquidity again, right? The way I personally approach this is I do not use the PBL method, so it's not something that I do consider. It's not better, it's not worse, it's just different. Okay, you need to pick one and be consistent with it. Use what you resonate the most. There are pros and cons. Okay, use which one you resonate the most. But what I do is I don't use PBL, and once price give you the entry, I just set the entry here. Okay, and now I'm waiting to get trigger. Even though PBL held and form a lower low, what I do, I still try to get involved. So basically, instead of having the entry here, because then this candle broke the low, the entry should be here for me again. Because if you forget about the PBL for a minute, imagine that the PBL was not here and was above, and it was still unmitigated. You would still try to get involved, correct? So that's how I do. Forget about the PBL for this moment and continue trying to get involved. So even though PBL was mitigated, I still try to get involved. And once this candle broke previous candle's low, I'm here with this entry, right? And in this time you get trigger, and I don't know, I don't remember, but I think price even, let me see. Okay, and price continue moving to the upside. So this is the difference between using the PBL method or not. Again, it's not better, it's not worse, it's just different. Okay, you need to pick one, the one that you resonate the most, and stick with it. So I'm going to talk again in this case about this entry just to clarify any potential question. So imagine you have this PBL, right? Imagine that the PBL, let's say for this video, imagine that PBL is here. When price gives you the entry, right, you still try to get involved, but because the PBL is still unmitigated, you keep looking to get involved, correct? So that's the same thing with the method that I use. I forget about the PBL method and I just have the entry here and I try to get involved. Once this candle broke this previous candle's low, I just adapt. Okay, when do I stop? I stop when price fail, when the medium time frame POI fail even by a weak break. Imagine that price is going down and weak, the supply and demand, weak through, right? Then I stop. I stop looking for the trade and I stop looking to get involved, because from my data, extensions is a little bit more low probability. Not, it still works, but it's not worth the risk in my opinion. That's why, for example, in this one, the first one, right? This is when you can take the trade, but this is very different from this trade because this happened straight away and this was a little bit more of extension, correct? So yeah, that's the video. Hope you guys like it, and yeah, see you soon. Bye. Hello guys, Tomasz here. Welcome to this video. I'm going to talk about LC2B using the refine M15 swing strategy. Please do not skip any of the previous LC content. Even though it's the M5, the process is very similar. I do recommend you guys to watch those videos first and then watch this one. Okay, so the trade that I'm going to talk about is around this region. It was a very simple trade, but I won't talk about a few details. But coming into the daily, okay, just starting the daily time frame, we have a very important concept, that is, after the daily break of structure, once we have the daily internal boss bullish, we have the indication that the pullback is going to start, right? Once then the premium of the daily bearish swing structure is reached, and then internally we have now alignment between the swing and the internal, we know that the low is likely to get run, and we now can looking for sells, and ideally this range tend to get respected until the low goes. Okay, that's something that I want to make reference, because it's the idea behind this trade. We have the push down in this case, and then internally you can see here price push up, push down, and then push back up. So internally we have this shift indicating that the pullback is going to start. And by the way guys, if you are confused about this not being a break of structure, again, there's nothing wrong if you map this as a daily boss. We all came to the same conclusion in this trade here, but I do recommend you guys to actually watch the market structure series, mainly the video where Matt talks, and the title is "Does Swing Structure Matter?" Okay, please watch that video again and you will understand perfectly what I'm talking about. So in this case, the daily internal boss bullish facilitates the pullback. Once high probability supply is mitigated and we have this shift, okay, much more clean. This is a change of character because there is an inside bar, but once we have this clean shift, we have a good indication, okay, the bullish objective may be completed. Now we can head lower. Okay, so that's the point on the daily time frame. We also form super clean equals. When price push back up, mitigate what the internal premium prices of this bearish leg. So when price push back down, this is much cleaner on the H4 again, but price reached the internal premium prices and swept the high, chopped bearish. You guys will see that it's very likely the low is going to get run. This is a weak supply, but is based on the H4. So I'm going to talk about H4 because it's much cleaner. Okay, you can see that this is a super clean H4 break of structure bullish, which for me was a daily internal boss bullish. So it's very important. And another thing is the fact that price mitigate what high probability supply, H4 boss bearish. So now H4 is in line the daily. So basically we have a good indication that price is going down. Imagine that this is the daily, okay? This is the daily time frame, and then H4 boss bullish pullback is going to start, right? Mitigate premium prices, H4 boss bearish. What that means? It means that the low now is likely to get run because the daily is bearish and now H4 is bearish as well. It's aligned with the daily, so with a good indication the low is going to get run. Okay, in this case, focusing on this most recent price action, we have a big push to the downside, then price push back up into the premium. Okay, this is a H4 supply in the premium, but what I really like, was the fact that here price, even if you analyze just this piece of price action and you forget everything else, you can make sense of this trade, because you can see that we're coming from the premium, we have a massive equal lows, and not only that, this low, right, failed to take out the high. It swept the high and chopped bearish. You can see this low failed to take out the high, swept the high, right, and chopped bearish. What that means? It means that this low is weak, correct? So what that means? It means that I'm going to look for sells. I will not and will never recommend you taking trades from weak legs. This is a weak low. I'm not looking for longs, never. Or at least 90% of the times, or 95% of the times, I won't take it. The only possibility is if suddenly this high would be weak as well, but it's a little bit more complex. I want to keep it simple in this video, and you already see that after this low fail, take out the high, chalk bearish, indication the low is going to get run. And we also have a lot of liquidity here, so it can act as magnet for price to go down. If you drop to the H1, you can see how clean it is. This low here failed to take out the high, chalk bearish on the H1. It looks more like even a strong internal boss bearish, to be honest. Super clean shift, and then we know that this low is weak and the objective is not completed yet. What that means? It means that I can still look for sales, playing the objective and making sure this low gets run. Okay, so let's focus on the sales, because I hope you guys understand the idea behind the sales. And now I have this internal range on the H1. I mark the POI, which by the way is super clean. It's extreme swap liquidity, okay, from premium prices, so very clean to look for sales. Again, I do not recommend you look for lower time frames while price is around here. It can lead you to some unnecessary loss. Wait always for the medium time frame POI mitigation, and only then drop to the M15, which is the lower time frames. Okay, so for the sake of this video, I'm just going to drop here to analyze price with you. So at this moment, I'm not doing anything. You can see that it can get you some false conclusions. You can get, for example, in this case, you will not get involved because the entry would be a stop order here, but you can start making sense of some leads. You have some low time frame noise, so wait first from the medium time frame POI, correct? Otherwise, stay away. So price, mitigate the POI, perfect. Now it's time to take the trade and analyze if there's any entry model. So price, in this case, what it forms a super clean LC to B, which is the equals. Okay, one thing that I want you guys to know is that with equals, I do not expect to be something like that. For example, this. For me, I do not take this kind of equals. I do take these kind of equals when they are flat and not steep. And the reason why is it's important to explain this, because you need to understand to actually implement correctly, in my opinion. You really need to understand the reasons why. And if you understand here, this for me is just an indication that the bullish order flow is going to continue. This is an impulse, correction, impulse. I do not want to try to call the tops around here and get multiple losses. When price give you this kind of steep nature, steep price action, it can continue moving up. It's just showing me that order flow is still bullish. That's why I do not take this kind of equals. What I do take is when they are flat and I can see some kind of deceleration. I can see clean gap between them, clean retrace, showing me that there's still there's a clean double top formation. Because in this example, this is very different. This showing me deceleration compared to when it's steep, bullish order flow, to deceleration. I'm essentially waiting for price to build all the liquidity here, sweep the liquidity, and then we go. So this is very different, and people sometimes can apply this model not correct, in my opinion. You need to understand what you are playing. You are basically waiting for deceleration, and once that deceleration is created, is formed with all the buy side liquidity above, once price push up and aggressively retrace, that's a good indication price is going to go. Okay, this small detail is very, very different. Again, wait for flat double tops, not steep. So in this case, you would have the entry. By the way, guys, let me explain. So basically, after this, I have the entry ready straight away, and just want to make reference that I'm only interested to take the trade while price inside this medium time frame POI. If it's already outside, even by a pip, I immediately stop looking to take the trade. Okay, price needs to be inside the POI. Okay, next candle comes, it broke previous candle's high. So straight away I adapt the entry to this region. And we know that we're still inside the POI, so still valid to look for sells. And I continue and I get triggered in the trade. Okay, what we know that the objective of the trade is to take out this low, and we also understand that this is a lot of liquidity, so it's up to you how you want to manage. Okay, it's not a video to talk about management, it's up to you, but you can see the powerful of the concepts playing out. Okay, so again, the point I want you guys to take away is please wait for deceleration. This is a pattern that involves deceleration. Okay, is not trying to catch a top when we have just bullish order flow. Okay, we need to wait for deceleration, create all liquidity above, push up, swap liquidity, and then we go in the right direction. Okay, one thing that is also very, very important, I think it's always nice to talk about, is, for example, if imagine that, let's say the POI was like this. Okay, imagine the POI was like this, and we still have a lot of room to play the LC to B. If you use the PBL method, okay, if you use the PBL method, you need this to be unmitigated, right? So once price push back down, and if it push back up, ideally with candle closure, with body candle closure, okay, if price push back down and push back up, you would stop looking to take the trade, because the PBL held, it formed a higher high, and you stop looking to take the trade. So imagine that price push back down. Imagine that this candle actually mitigates the POI and continue up, while all previous candle size gets broken. You stop taking the trade, correct? That's nothing wrong with that. Is the PBL method. If you use the early entry method, which the one that I use, we just delete the PBL. We don't use the PBL, and even though price can imagine that the PBL for you is this one, okay, and for some reason price mitigates the PBL and continue moving up, we can still look to get involved while price is inside the POI in the first place. Okay, that's something that I think it's very, very interesting, but you need to test and see which one you prefer. There's no right or wrong. There are always pros and cons. You need to see which one you prefer, which one you resonate, stick with one, and be consistent with it. Okay, that's it for this video. Hope you guys understand. The main point was what constitutes a good LC2B, and yeah, see you guys on the next one. Bye. Hello guys, Tomasz here, welcome to this new video. In this particular video I'm going to talk about LC1 using the refined M15 swing strategy. Of course, before watching this video, please do not skip any of the previous LC content. Even though it's on M5, it's still very relevant and the process is very, very similar, so please watch those videos first and then watch this one. So this example here with the LC1 I'm going to talk about, I picked this one because I also received a few questions, and I think it's a common question, that how can we approach price when price is trending very hard, okay? And this is when LC1 can be very, very tidy. So in this case, on the daily, there is not much more information than the fact that price is selling for the last 4 days, correct? Price is at the discount, daily break of structure. There's not much more information than that. So we need to use the other time frames, such as the H4 and the H1, to understand what should happen next. One thing that I also just want to mention is that after the break of structure, right, when do we know that the pullback is going to start? Usually is, yes, sometimes you can have a daily chalk, but usually it happens when, for example, the H4, which is the lower time frame compared to the daily, was bullish, okay? That is a good indication that the daily, right, is going to pull back. And when do I know the pullback is over? When the H4 was bearish, in line with the daily swing structure, okay? Now, there's other possibility, that is for price to boss bearish, but continue moving down, okay? And how can we approach this? We know that for the pullback to start, which can happen after the break of structure, ideally H4 boss bullish. But while this is protected and while this is holding is internal, let's say internal daily high or H4 protected high. So while this is holding, we can and we should assume it's going to hold. We should not assume this will fail, okay? Yes, we can use multi-time frame analysis, understand that we just boss on the high time frames, and we can make a push to the upside playing the pullback. But while this is still holding, I will not assume this will fail, okay? It's almost being, how can I say, it's almost being very persistent with the idea that structure should hold until it doesn't, period, okay? So when price push back up, or even here, which we are a little bit in discount after the ball, so price can definitely pop up, but while this is holding, I'm still looking for sales. So, and this is where you can use your experience, the way you like to trade, to approach these scenarios. What I mean by that, for example, you can look to sell from here aggressively, such as soon as price reach your medium time frame PY, you look for sales, or you can simply do something different, which is wait for more confirmation, because I understand that we are lower in the leg, and once I have a good confirmation that this low is weak, I then look to get involved. So even though the idea remains the same, which is this high is going to get run, I'm also very, very aware the fact that there are two possibilities of getting involved. One, being aggressively, getting involved straight away, assuming, almost having like a blind assumption that this is going to hold, which is fair enough, it's valid. Or if you are more conservative, you wait for the shift, we have the indication how this low is going to get run, and then you look to get involved. And yeah, there is also good scale-ins or continuations around this region. But this is how I approach trading after a time frame break of structure, okay? I do not assume this will fail until they do, correct? And if for some reason they actually fail, okay, pullback is going to start, price pulls back down, and there we go, okay? This is a very, very brief summary, but I think it's interesting and it's very important. So I also choose this example specific because of that. So, and also because LC1, which is using lower time frame lead, is often utilized in these aggressively continuation trades. At least for me, the way I see it, we develop this method to make sure we capitalize on these trending environments, because sometimes people, and I completely understand, sometimes people can see price go without getting involved, and we have all this leg without getting involved. So how can we get involved in this leg? Exactly with the LC1 I'm going to show you in a minute. So that is the problem, and LC1 is the solution, guys. So in this case, let's see. Okay, on H4, for example, let's analyze very quick H4. So basically, how do I know that the pullback of the H4 is going to start? This is a protected H4 high, okay? And this is the leg, correct? This is the leg. How do I know that the pullback is going to start? The pullback of the H4 only starts officially after this break, after this internal break bullish, and now we have indication, okay, the pullback will start. But remember what I said, never assume that order flow will fail until it does. So we can definitely look for sales from here, and depends, of course, how aggressive conservative you want to be, especially if it's super down in the leg. What you can do, you can wait until price gives you confirmation that this low is weak. So you can wait for the shift. And now we have a confirmation, super high probability setup that the low is going to get run, and we eventually can even get scale-ins during this period. Okay, so that's how I'm approaching. Let's use H1. You can see this form a very clean H1 structure. So if price for some reason, let me see here, if for some reason price push up here, I then look to get involved on sales. Again, you can wait for the more confirmation if you are not sure. Okay, there's always the possibility of waiting for more confirmation. Something that I notice is, as you wait, okay, sometimes you'll miss the move, but as you wait, you get more and more clarity what is going to happen next. Is the same as, for example, you go, let's say, you are in a boat, right, in the middle of the sea, and as you go and you reach, for example, this is not the best example, but as you reach the coast, right, you get close and close, you start seeing, okay, we are like, we can see the city, we can see other places. So what I'm trying to say, sorry, it's not the best example, but is as you let price develop, it will become more clarity, like where we are, what will happen, how can we approach, okay? So if you are not sure, wait, okay? But in this case, let's start, let's go straight to the example. Price never pulls back, okay? Price continues moving down. You can have a lot of fear of missing out, but not anymore with LC1. And now, sorry guys, we have this, okay? And this is when you can use what I just said. After price form an internal pulse bullish, for example, after price form an internal pulse bullish, like break with the body close, ideally with the body close above, that's a very good indication that price is now pulling back. Okay, that's a very good indication that what can happen. However, like I said, we can't assume the high is going to get run until it does. So because of the area of value, because it's such further down in the leg, the only way I'm going to approach this, the way I trade, is by being more conservative. So yes, you can look to trade straight away, that's not a problem, but you can wait for more confirmation, such as waiting for a change of character, waiting for some clean price action, okay? Also, something that I notice is, notice how tiny candles, how slow price action. This was formed during Asia session. So usually during Asia on GBP/USD, price is range bound. So I'm a little bit more concerned about that, because I know that this can be just small correction, especially during London Open. Price can still develop. The price can still do a much cleaner range. To then, I'm much more confident to look for sales, okay? Anyway, if let's say for some reason you are happy to look for sales, okay, for some reason you are happy to look for sales, you mark the POI and then you look for an entry model. This is the LC1. Again, lower time frame lead. Remember, lead is on the leg that moved down, the left leg. The moment price formed a lower low, the moment this candle broke previous candle's low here, for me, this is all part of the left leg. Okay, always for me, the moment we form a lower low, even with a weak left leg. Okay, this is lead, and in this case, if you are more aggressive, let's say you are happy to take the trade here, let's say very aggressive and you want to take the trade. Okay, price swept the high. So the moment it swept the high and disrupt the supply, I'm no longer interested. I'm no longer trying to catch the high of the move. Okay, so I'm now zoom out, and what we can have here, two things can happen. Okay, this is a very sideways price action during Asia, so price can sweep the high, move down, and then you have a much more developed range like this one. Remember to always look left and see if you can find commonalities in the patterns you are looking for. Remember what happened here. Price swept the high and push back down. What can happen? Swept the high and push back down. Okay, price tends to repeat these patterns. Or on the other hand, what can happen is this can be the first sign with a chalk that price is going to pull back. So I'm in a situation where I'm not sure what's going to happen. But let's say for some reason you want to look for longs because this is a change of character. I personally don't, because again, I'm not taking chalks everywhere. For me, when you go to the daily, the H4, like prices don't have anything to the left, and I'm not interested in taking longs based on just a change of character. It would be much better if you have an internal boss bullish, give me some signs of protected internal low. If price goes up with a candle closure, okay, that's a little bit better. It's still not ideal, but it's a little bit better because at least this is protected, okay? And with a wick, with a sweep right here, price just wick through, no candle closure. I'm not sure still what's going to happen, but for some reason, imagine that you are aggressive and you want to look for longs. Okay, so what you do, you wait for more confirmation, and you wait for the pattern, and price continue going down. So no pattern, and things start to become more clear. Like I said in the beginning, usually when price starts to develop and you give time for price, you don't rush, you let price develop, it makes everything much clearer. And what happens, price just form a well-developed range, which is basically price went down, went up, swept the high. So everyone that get involved here with limit orders or risk gains, whatever, get swept, and then price move back down. So it gives me some kind of similarities between this and this one. So this some kind of similar to this one. It swept the high and pushed back down. Yes, ideally price have a candle close. I'm not saying that that's not ideal. It's much better, but in this case, because everything is bearish, absolutely everything, daily, H4, H1 structure, H1 order flow, the fact that it swept the high and pushed back down, for me, it was a very good indication that I can mark this POI and look to get involved, making sure price can continue moving down. Because you always need to understand, and especially in trading, is like a chess game. You need to understand what you need to understand a few steps in advance, like what can happen and how price will look like. And let's see, if you have, let's say, an impulsive move down, wouldn't that be something you already saw multiple times? It's not very similar to this. I swept the high, push back down. So understanding what can happen and how the range will look like will give you tons of confidence to try to play potential moves in advance, if that makes sense, guys. So yeah, again, looking for sells, everything is bearish, and I'm looking to get involved. Now, what I do? Okay, this video is specific for LC1. Okay, so now I'm going to tell you what are my LC1 rules, right? So my LC1 rules are, I think I need to put like this. Okay. So my LC1 rules, let me just tell you very, very quickly, is that lead is always on the left leg, okay, on the leg that moves away, not the pullback, and any opposite candle color or inside bar. What that means, I'm not looking for fractal highs and lows. Ideally, the lower time frame lead I'm using is like some significant push down, like the most high probability trades are always when leads are relevant, such as, for example, imagine a flip formed through sweep of liquidity that gets swept. Imagine like a very decent low that gets swept. That is perfect, okay? But it's not necessary. For me, as long as it's an opposite candle color, so when I'm looking for longs, even if it's just a red candle, even though that every candle broke previous candle's high, and this candle did not form any kind of fractal pullback, okay, even if it's just all part of the bullish move, I'm looking to the candle's color. So basically, as long as I have like a red candle, I can mark as lead, and I look to get involved. So for me, this is valid lead, even though you can be more conservative and stick to this method, because I know majority of you use this method. Well done. Continue doing that. I'm just explaining what I'm doing, okay? And for me, the reason I use this is because I'm using M15. I'm not using M5. So especially when they are aggressively shifts and the ranges are very small and tight and I just want to get involved, I need to justify my entry model. And if I try to justify my entry model with this, sometimes I will miss trades unnecessary because I can see them playing out. I can see I just want to get involved. When you have that experience that of course you never know what's going to happen, but you have a good indication that the price is going to fall in the order flow, and the ranges are tight and the ranges are small, high probability moves, right? For example, in the discount of the bearish swing leg, I want to play the pullback. This is the lead that I personally happy to take, okay? Opposite candle color or inside bar. So if this is red, it's perfect, and I take the trade as lead. Again, guys, you can decide which one you prefer, but because I use M15, like I said, I'm happy to use this and have and take the trade, okay? So basically, let me see, how can I do this? Give me just a minute. Okay, so let's now talk about the trade. Here. Now that you know how I'm going to use lead, you already know that for me, this is lead. It's difficult to see, but this is like a green, in this case, a white candle, price push up, push back down, even though all candles broke previous candles low. So it's all part of the down move, but because on lead, I focus more on candle color, I'm more aggressive, I'm able to take this as valid lead, okay? So let's see. So price mitigates POI. The moment it mitigates the POI, I immediately set the entry. You can give a little buffer, you guys, up to you. You need to test and see what works. And that's the power of the LC1. The power of the LC1 is that it can help you get involved in this kind of moves, right? When price is trending very hard, you just want to get involved. You understand everything, but you just miss the trade. Now you won't miss anymore. Price push back up, mitigate POI. Okay, I really understand that this can happen. Sweep the high, push down, mitigate the POI. I understand what can happen and I just want to get involved. It's almost like an excuse to get involved. So you need to be very cautious. You need to have experience and you need to backtest to understand if this is worth implementing or not. Okay, I'm very, very happy to use this. I have enough data that shows me that this works. But again, you need to test and see if it works for you. The management is up to you, okay? I don't know what's your management, but you can see it works. One thing that I want to talk about, and this is going to be covered in other videos as well, but just have your brain start thinking, or at least if you already watch other videos to know if you understand the concept, is with the early invalidation method, or whatever you want to call it. In this case, for example, imagine that price gives you the entry here, but imagine that for some reason the medium time frame POI is here, okay? For the sake of this video, imagine that this is the medium time frame POI, okay? The entry is ready. So, okay, now you got involved. So, sorry, forget what I said. The entry is ready, right? But because there is no medium time frame POI mitigation, you can't get involved, okay? You can't. So, now that the liquidation candle was formed and would get you trigger, when price push back up into the medium time frame POI, you need to wait for the new LC model again, okay? Essentially, the LC models can happen everywhere, but they are only trigger points once medium time frame POI is mitigated. If the LC model happen before medium time frame POI is mitigated and the liquidation candle, everything would everything correct, like you would get trigger, but before medium time frame POI mitigation, it means that, okay, the pattern is already completed, and now when price mitigates back up to the true mitigation I want to trade from, I wait for another one, okay? I hope you guys understand. Essentially, I'm trading the pattern, the liquidation of the pattern, and if that gets me trigger before medium time frame POI mitigation, of course I don't get trigger, but if that entry, the candle, if price goes down and the entry gets ready, because it's not at the medium time frame POI mitigation, I need to wait for a new LC model once that medium time frame mitigation is achieved. Okay, guys, hope you guys understand this video, especially with the diagram. So yeah, you can see the power of the setup, because it helps you to capitalize in those aggressively moves where price just keeps trending and trending and trending. Okay, that's it, guys. Hope you guys like it, and yeah, see you in the next one. Bye. Hello traders, welcome to this video. I'm going to talk about a recap on GBP/USD, combining everything, all the concepts we just talked, and hope you guys can take some value. So I personally don't tend to use the weekly time frame as much, just because I'm not very interested in catching or trying to predict those massive high time frame runs. It's not something that I personally am interested at the moment. So yeah, I'm not using that much. However, something that is very, very interesting in this piece of price action is that we swept this massive low, and after swept massive high lows, what tends to happen? Price tends to pull back. And I also noticed that, for example, phase C and D, this kind of pullbacks tends to be much more relevant and tends to follow through when this kind of massive highs and lows are swept. Okay, so that's the only thing on the weekly, to be honest. If you drop down to daily, I personally map daily structure like this. I think that's also nothing wrong if you are a little bit more conservative and you just see this as a big leg to the downside, but for me still a relevant push up and then push down, so I just mark this as a daily break of structure. The most important thing, in my opinion, is the daily chop bullish, especially with a candle close. So it's a very strong sign that the possibility of making a pullback is very high. So we know that you can use all time frames. For example, in this case, the weekly. Imagine that this is the weekly time frame, and we also know that after the weekly break of structure, when do we know that the pullback of the weekly is about to start? We know that the pullback of the weekly is about to start when the daily actually boss bullish. So the first sign the daily can boss bullish and eventually start this large pullback, okay, the first sign is the daily chalk, because before the break of structure on the daily, what tends to happen is a change of character. So the first sign it can happen is this chalk, and the chalk can end up follow through until the break of structure. So the first daily chalk for me is a very strong indication, especially after this massive sweep, that a high time frame massive pullback is about to start, or at least can start. Okay, so if you focus on this piece of price action, we have this massive also sell to buy candle. You guys know that I like drawing zones like this, and yes, there's still unmitigated stuff below, but at least after this demand mitigation, there's a small possibility that price can head higher. Okay, that's true. So if we now use the H4 time frame, what we can see? We can see that we have this H4 boss bullish, right? Of course, we know ideally price will be much more have much more conviction moving up, but in this case it's enough with a body closer if you are 100% mechanical. If you are also mapping this as your H4, right? H4 boss bearish and then this H4 boss bullish, you will have more confirmation because price end up follow through. But yeah, I'm happy with this one, and the idea is the same. So basically H4 boss bullish, then push back down, mitigate the daily, right? Daily demand. And also if you map the premium versus the discount, right? We are around the EQ. So at any time soon, price can continue moving up and continue with a high time frame higher low, right? Hope you guys still with me, but the idea basically is trying to play a bullish move that we know that this high is only confirmed as weak. Okay, this can only be confirmed as weak once we actually have a break above here. So after price, what I'm trying to play is trying to get involved before price actually do this. But because once price shift bullish and we now have internal structure in line with a swing structure, what that indicates that now it's time to go up. You can definitely wait for this confirmation. There's nothing wrong with that. But if there is any opportunity I can get involved earlier, I will, because it makes sense. Daily demand mitigation at the EQ and price can just continue moving up. Especially if I can see that if I go to H1, especially if I can see that this H1 supply, okay, or even if you classify this one, this big buy to sell is not mitigated. So what I mean by that, if for example I look for longs, I much prefer looking for longs here, okay, than looking for longs here. Because what is the difference? The difference is what I'm trying to play. You need to understand what price is doing. And in this case, I'm playing the pullback of this H1 leg. Okay, I'm trying to get involved in the pullback because this can easily be a push up, mitigate supply, and then continue down. So as things stand, this is just a pullback. I know, and like I said previously, this can be the beginning of the break here, and then once this breaks, we have a free pathway, let's say, to take out the high. Okay, but as things stand, it's just an H1 pullback after the daily mitigation. So yeah, that's something to consider. So trying to play longs before this is mitigated. So let's see. Boom, massive push to the upside. Okay, what that means? It means that we now have a change of character here. This is a true change of character. We can mark the POI here, and what we have now. It's very simple. It's the same concept all over again. Okay, just change the entry model, but it's all the same. So price did not mitigate nothing. Okay. Nothing is mitigated, that's relevant. So I'm still interested to play the bullish pullback before price reach this mitigation. So let's see. Let's see. Yes. Okay. So what we have here, we have the H1, right? And then we need to understand what's happening on the PBID leg, so the right side. And we have this LC2A, correct? LC2A. Let me use my replay. LC2A. So you can mark this as being the PBL. Okay, it's up to you. Like I said, and you guys already saw in my videos, I do not use the PBL rule. It does not mean it's not working. It's just different. Again, pick which one you prefer and be consistent with that. Pick the one that it resonates more with you and be consistent with that. Okay, so in this case, I'm just drawing this for you guys to see the difference, but I do not use it. So LC2A, I'm just waiting, right, for this mitigation to validate the entry. You can see that price push up during the weeks, right? Push up, mitigate the PBL and push back down. I know that price never closes below. So if you are using body closure to see if the PBL make its job, in this case, you could still try to get involved because this candle never closed below this one. But if you use the wick method, which is basically when price push back up, PBL held and form a lower low. Okay, so because it formed a lower low with a weak break, maybe it's enough for you and you just simply need now to wait for a new entire liquidity entry model. Okay, that's one method, which is the PBL rule. I personally just delete this, and as long as the liquidation candle was not formed yet, I'm still happy to get involved, especially as a medium time frame POI is now mitigated. So this is the entry, and I just get involved around 9 a.m. London time, and we know that this can be two things. Okay, this can be a pullback, right, to mitigate supply and continue down. But if this daily mitigation, right, is going to fulfill this objective, this is going to break. And once this breaks, what that means? It means that now the internal, the swing bullish H4 leg is bullish and the internal is bullish as well. So the high is very likely to get run. So let's see. This is H4. Okay, so now at this point, this high is very likely to get run. And price end up going to the downside, to the upside. And that's it, guys. I hope you guys took some value. Okay, of course it depends your management, how you want to manage, but if you are a very swing trader, let's say you like to have those long-term trades, you can have like some partials, and once this broke, we now know the high is very likely to get run and you have a big trade. Okay, but again, the main point for me in this trade recap, it's for you that understand the difference between the PBL rule and not the rule that I use, which is no PBL rule basically. So I do not use PBL rule, and the difference between if you wait for the weak break to classify as the PBL making its job, or you need to candle closure. That's two different things. It's up to you how you want to approach this. But hope you guys take some value, and see you guys on the next one. Bye. Alright guys, welcome to this video. Tomasz here, and I'm going to talk about stats and all the process that we do in Photon in order to keep improving, evolve with the markets, and always progress. Okay, this video will be a little bit longer than usual, so please stay with me, and hope you guys take some value. So for me, process is something that I super involved with. It's something that I really find interesting, and it what separates, in my opinion, inconsistent from consistent traders, or at least future consistent traders, because in any business you need to have some foundations. You don't become, for example, profitable from like random actions. You need continuously doing the same thing, and only with the right process you can have that everything in place. Okay, everything in place that will lead you to that end result, that goal. So talking about process, I don't want this video to be super long, so I want to be relatively quick on this one. But process, basically, I recommend you guys doing the daily markups. Okay, this is something where you train your eyes, you always keep sharp, and yeah, it's very, very nice. So daily markups, if you use the M15 swing strategy, I just recommend you do 1 markups per day, so you don't need to do London recap and New York recap. Basically just wait for the end of the day and do both New York and London and New York together. Okay, guys? Then going into the weekly report, this is something it's very, very important, which is basically where I personally go over last week price action, and I try to study, try to see where were some mistakes I made, where can I improve, but it's not enough to give me any kind of real changes. Okay, it's just for me to see almost as evaluating myself over last week trading. Okay, it's not something that I start changing strategies or start thinking about changing strategies based on the weekly report. Weekly report is basically, if you have, because on trading we don't have bosses, okay, it's just we are alone. It's something that you imagine that you have a boss. In the end of the week, you give them the weekly report to see how the business is going, to see everything, if every employee did everything correct, so the boss knows what's going on. Okay, so that's what I do. And then the monthly ASR. The monthly ASR, this is where I dedicate a couple days in the end of the month and I go over all my live trades and missed trades, and I can see I start seeing some ideas where I can improve. So I have at least, imagine, 10 trades or 15 trades, and I can start seeing, okay, I may need to change something, or I start seeing some light about possible change in the future. So it's really, really important in the end of the month, your monthly review. Okay, then go into the quarter review. This is when everything becomes much more interesting, because at this point I review the last 3 months and I now have not just ideas, but I have the data. So I have the live data that can tell me, okay, Tomasz, it's worth going this way and stop doing that. It's worth doing this and stop doing that. So I have at least now the data that shows me what I need to do to keep improving. Sometimes you don't have anything to change from quarterly to quarterly basis, but there are times that you can actually see small tweaks, and believe me, these small tweaks every quarter in the end of the year is a big, big difference. Okay, even if it saves you 5% or an extra 3%, 3 times 4 is 12, right? So yeah, I really think it's very, very important period. And then the yearly ASR. This is where you need to dedicate a few weeks, not days, a few weeks in the end of the year and go over all the quarters. Remember all the lessons again, so you can start the next year with the main ideas on forefront of your mind, with everything you learn from the quarterly folders. Okay guys, this is a very general approach, but I hope you guys can see that in any business like trading, you need to have process. Imagine that you have a restaurant, you want to have every employee, for example, in the end of the week, giving a report on how things work. In the end of the month, you want to see if the month is doing with profit or not, to know what's happening. In the end of the quarter as well. And for example, in the end of the quarter, you can have now, instead of selling pizza, let's say, you can sell fish, because you can see that selling pizza does not worth it over 3 months period. Okay, so it's the same in trading. Over a few months, you can start seeing what works, what doesn't work, and this is how we will approach trading for the rest of your trading career. This is how we do in Photon, and to be honest, it just makes sense in my head, because if I was a student, what type of mentor what type of mentor would refuse to learn and keep improving every single year? I'm not saying about changing strategies, because I don't believe that that's the last thing I want to do. I really don't want to change strategies at all, because I know the amount of work it takes to create a strategy. So that's not something that I recommend. But if I was a student, I would like to learn from someone that every single quarter and year tried small tweaks here and there to make on top of their game, okay? Because if I was a student and the mentor that I was learning trades the same the entire year, I mean, I think in 1 year you have enough data to make small tweaks. I'm not saying that you need to change the strategy. That's not what I'm saying. And again, I refuse to change strategies because I know the work it takes to create a new strategy. I'm just telling that small tweaks are needed in order to you to keep evolving with the market and improve. Okay, guys. So let's now talk about what happened now. Problem, right? So we found that there was, I don't like the word problem, because for me it's not like the fact that something will make the strategy, this is not something that will make the strategy stop working. The strategy still works with the old entry models. However, the new version, the LC models, are literally a game changer and will improve it will improve the strategy overall, right? So we start experiencing some low trade frequency over the quarter. So low trade frequency, some no tags, and also people forecast in detail, get the move correct, but unfortunately they could not capitalize, okay? Or people are a little bit confused. Should I enter on the flip? Should I enter on the extreme? So they're all kind of, let's say, problems that we were faced with the things that we did, okay? And then we, of course, found some solutions. This is LC1 to A and to B. There are more. I'm going to talk about that in a minute, but this is basically the liquidation candle, the new variables that I personally trade, okay? I trade these three models, and this is why I put here the solution. Okay, so how I came to this conclusion. So I basically did round one, so Euro USD 2023. I did round two, GU 2023, and then round three, Euro Dollar 2022, and then round four, GU 2022. So ideally you want to start with 2022 and finish with 2023 because it's more recent. But yeah, I just did the opposite, and it's not a massive difference. But if I was going to start over, I would start with 2022 and then I would go to 2023. But one thing that is very, very important for you guys to know, and I want this to be super clear for you when you're starting doing your testing, okay, is that on round one, I'm going to show you the stats. I don't want you to start filtering too much, okay? For example, in round one, I took much more entry models than these ones, okay? I want to take almost everything, okay? I want to have the data. I don't care. I'm not trying to be perfect in round one. I just want to have as much data as possible, of course, valid, but I just want the data. And then I analyze everything as I finish the year. I analyze absolutely everything, and I make some refinements. And after those refinements, I make a trading plan. And then I go to round two. Again, I take everything that fits in the first refinement list, and I have the data. Again, I do the same thing. I go over all the trades, I make refinements, and I adapt the trading plan. And what I do now, I go to round 3, which very refined trading plan, okay? And I analyze all the trades I took on EU 2022, and then on the round number 4, I have like 3 refinements already, 3 trading plans refined already, and then I have a very, very close idea on how I want to trade them live. Okay, this is when I want for you guys to reach this phase where you are fully confident about how you want to trade. So of course, after round 4, you also analyze everything and you make your super refined trading plan based on these 4 rounds. Okay, this is what I did. Again, I start round 1 with multiple entries, then I analyze round 1, and I go to round 2 with a little bit less entries, and then round 3 with even less, and that's how I did it. I always refine, but it's very important, at least in the first 1 and 2, start with as much data as you can, okay? Don't worry about being perfect. Also, I really want you guys to understand that if you are going to create a strategy from scratch, that will be a different story. I personally don't recommend you creating a strategy and just having 2 years of data, or for me, just not enough. Okay, even 3 years of data is not enough for me. If you want to build a strategy from scratch, you need much more than that. You need much more than 100 trade examples. But this is what I said in the beginning. This is just a small tweak. This is just a small variable on top of an already profitable strategy. Okay, this is how every year you should improve your strategy. So the strategy works, but now based on my data, I analyze everything, and next year, for example, let's say it doesn't matter, but imagine that in the coming months, you then go with a much better strategy. Okay, so the strategy is the same. I want to make it very clear. The strategy is the same. It's just a small variable, and that's why I just made 4 rounds. Okay, because the strategy is the same. It's just a small variable that I want to introduce based on the problems that I found and how I found those problems making this process. So you can see everything is together. I do the process, I found the problems. I found the problems, I have some solutions. I test the solutions. Once the solutions are tested, I implement, and then I repeat. Next year, with the same process, I will find some problems. And I pick those problems and I find the solutions. And once I find the solutions, I will test. And again, it's not a different strategy. It's just a small variable. So I will now just, for example, make 4 rounds and then I implement. Okay? And a big problem that I see is people, for example, they are here, they implement, they have a drawdown, and they change that strategy. You don't even know that the amount of work you need to go through again and again and again to understand the next strategy again. Okay, so I really want to make it clear that this is the process, this is the steps we make, and it's something that I will do for the rest of my life. So I don't have any problem. So here you already know, I already shared this video. I already shared this Notion folder when I was recording for the M15 old entry models swing strategy. So I just want to know to show you how I did it. So basically, this is all the creation of the strategy. It takes massive work, but this is, like I said, just a variable. So now you click here, and then this is a small tweak. The strategy remains the same. So round 1, I'm going to talk about this in a minute, guys, but I test LC1, LC2A, LC2B, combining A and B. And then I also was very interesting to see how LC4 was combined. Okay, so I test this and I just have my notes and my improvements, and once I have my improvements I go to the next stage, and I did round 2 and it's the same. I did LC1, LC2A, so I start making some changes, and then again notes, improvements, and then I go to round 3. And you can see on round 3 I have a much more refined plan. Just LC1, just LC2A and LC2B, nothing more. Okay, and then round 4, which is the most refined way, and then I have a summary of everything, the most important notes, the most important improvements, like everything. Okay, absolutely everything. And this is the work it takes if you want to add a little small extra variable on top of your already existent profitable trading plan. Okay, we are not in Photon making changes just because we want to make changes. Every change we make in Photon, we make sure it's super well studied to make sure we have 100% confidence sharing this to the public. Okay, it's not by coincidence that the time this recording is December, and this month we have tons of people getting funded with the new LC models. Is because we do all this work to make sure the variable that we add will change and improve the strategy. Okay, so that's what I did, and now I want you guys just to see the stats. Okay, so round 1, please don't try to replicate this, because the round 1 is where I took absolutely everything. I'm not worried about stats at this point. I just want to see visual representation of the data. I want to see the screenshots. I want to see setups that works, setups that doesn't work. I want to build rules. So please forget and don't replicate. Don't try to replicate this. But you can see that was still decent. Like, I'm not very focused on the percentage, but yeah, it's still nice strike rate. 84 are okay, because commissions and buffer, especially with M15, I put 0.2, but it's a little bit lower, honestly, because if you use M15, you have a bigger stop loss. Because you have a bigger stop loss, the lot size is lower, and because the slot size is lower, the commission is also lower than the M5. So January, February, March, April, May, again, I don't look too much into this because I'm just trying to collect data. I took absolutely everything. LC1, okay, I took LC2A, LC2A plus 4, I'm going to explain that in a minute. This LC2A plus B is basically when we have equals, but at the same time, it can be a fake break. I'm going to explain as well. LC2B, you already know, and LC2B plus 4, I'm going to explain that. And that's the same. Okay, so basically what I want you guys to know is this. So basically, what is LC2B plus 4? It's basically what at least, of course, this happened during my testing, so it's not something that I implement, but I was just seeing if it works. In trading, you need to be a little bit creative to make the strategy, let's say. So in this case, LC2B plus 4 was basically when we have these equals and price swept the low, and then you're basically trying to play the liquidity interval number 4, but because it's super aggressive, especially with these entry models, I was making a strict criteria that I need to see LC2B happening alongside the LC4, okay? And I test that, and I also test LC2A combination with LC4, okay? And then, yeah, that's the same thing, okay? I also test, I test this LC2A plus 1 is like when you have LC2A, which is a fake break, but you also have low time frame lead as extra confluence, and the same as well. The LC2B, which is the equals, okay, when we have, for example, this equals, but then for some, let's say they have something like that, you have this equals, but you have also some LC1, so low time frame lead as confluence, okay? I was just don't be so fixated here. I was just trying to make things, trying to see how can like what can work, what can probably doesn't work. Like I was just trying to see, and yeah, that's how I approach round one. And yeah, you can see that the most trades came from medium probable trades, which it kept going that way around the 4 phases. Also, in terms of phases, is not something that I can say about that. Unless like you can see, like phase D is the worst. And yeah, you can also, very interesting is that London Lul and New York Lul is something that, in my opinion, I found it does not worth it trading. Okay, even if you trade the M15, I found that London Lul and New York Lul over all rounds does not worth. Okay, my goal in trading is I much prefer to have a high strike rate than high risk reward, and a very easy to fix thing to increase strike rate. I found that it was just stop trading during London Lul and New York Lul. You can see that the strike rate is horrible during. No, this one is not horrible. It's decent, but yeah, does not worth with risk reward the percentage, right? I'm going to talk about this in the other rounds, but you can see that everything makes sense. That's round one. Then I go to round two. The same, very interesting. The most percentage came from medium probability trades. Everything you can also see that the variable number 4 start not working. You can see minus 1.8, just 2.3. So I slowly start deleting this, and this is what it's all about. You start with a very general approach and slowly start to refine things. Okay, I immediately understand, okay, this does not work, or at least is not something that I want to trade from, because I really just want to have as much strike rate as possible. It's what I like, and yeah, this is much more aggressive, so I just delete. Then what we can see again here on the phases, phase C and B end up being with less strike rate. This is what I care about. Range, of course, is negative, but we already know that range is the lowest probability one. And yeah, there's not much more to say about, to be honest. London Lul also, strike rate not great. New York Lul, strike rate not great. So what you can see that actually trading during London and during New York worth more than just having trading the entire day. So if I want to increase the strike rate, okay, I can simply delete London Lul and New York Lul, and this will increase by just a simple quick fix, right? I just stop trading that. So this is the power of data. I know, for example, from round 2 that I really want to trade just London and New York. I know that I won't be trading the variable number 4 that I explained in a minute. I explained the previous minute, and yeah, LC2B was something that I was not sure, to be honest, but even though it gives small percentage in the end of the year, what I really like is the fact that the strike rate over the 4 rounds were all more than 50%. So yes, it's more rare. Yes, it's not as good as LC2A and LC1. It's definitely the better ones, but what I really like is the fact that it's high strike rate. It's at least something more than 50%. So I'm happy to keep trading that. So round 3, strike rate was really decent. And remember that I still continue, even though I knew I won't trade it, I still continue track data for London Lul and New York Lul. And I can see straight away, again, just confirming the idea that I won't trade this, because 33% strike rate, 42% strike rate. you can see London 77, New York 60. So yeah, I'm also very happy to take medium and high probability trades. This is where medium probability trades were majority of percentage came, and this is also good to know because it helped me reinforce the idea that I don't need to be perfect. Okay, I know I don't need to take only the A+ setups. I can take A+ setups or just A or B+ setups, whatever. I just want to know, and I already know based on my data, that taking those medium probability setups, it's worth in the long run. Okay, I'm still profitable, and this is where majority of my percentage came from. Okay, so I don't need to be super conservative. So phase is already something that I was expecting. Very, very decent. Yeah, nothing to say about this, to be honest. I personally like to trade all of them. The A+2, A2, B, C, and D. I take often. I don't take ranges, so sometimes I can take, but it's a mistake. But I still track, but not something that I pay attention, to be honest. And yeah, you can see, for example, from my strike rate and my results, that LC1 is where majority of my trades came from. LC2A gives very big strike rate, but LC2B, even though it's just 9% in the end of the year, strike rate still decent. And remember, guys, I trade more than one pair. Okay, I trade EU and I trade GU. So okay, it's just 10%, but 10% times 2 is 20%. From those 20%, even if I catch half of that, so net 10% in the end of the year, is still decent and can cover some of my losses that I will be taking for sure. Okay, so things that I like is the strike rate above 50%. I will take it. Very, very nice. And yeah, that was a decent year. Some negative months here, which for me it's not a big deal. Again, I don't focus on monthly returns. I'm much more interested on quarterly returns and year returns. I don't think on a month-to-month basis. You can't think of month-to-month basis. But again, if you trade more than one pair like myself, that helps because drawdowns, you diversify your portfolio, and that decreases probably the drawdown periods and helps having a much smoother equity curve. Okay, and then GU round 4, which in my opinion was also very decent. Every month was positive, very, very good. And then what again I really like is strike rate always above 50% on each entry model. Very, very clean. Majority of my returns coming from medium probability setups. It's funny that these low probability setups end up having good strike rate, but as I took 4 rounds, I can see that I'm not interested in taking low probability setups at all, and you can see the risk reward is also very small. Majority of them are medium probability and high probability, so that's what I want to take. Again, another one that London Lul and New York Lul stop doing because it does not work at all. 4 rounds telling me the same, and that again will increase the strike rate of my overall results straight away. So that's very, very nice. In terms of phases, I don't have anything to say, to be honest. Phase D was it was not the best, but I have 4 rounds. I can see all of them. If I combine everything, I know that it's still worth getting involved. Sometimes the year is not as good. I remember this year, 2022 for GU was not an easy year, so I don't mind still taking this. So yeah, let me see if I can here. Okay, you can see very, very nice from the stats that very, very smooth equity curve. The quarterly, what I really like is the fact that it tends to improve. Sometimes we can have a slow quarter, but yeah, overall goes up. The phases, the D is the worst one, but I still happy to take them because yeah, I have more than 1 year of data, and again, this is just a small variable on top of an already profitable existing trading plan and strategy. So I know how to take phase D sessions. It's something that I really interesting because doesn't work and your cool doesn't work. Majority of the probability return come from medium probability trades, and LC1 right here, LC2A and LC2B. Okay, this is one type of entry model that you don't need to take. It just, if I don't know, if you like it for some reason, you find it works like I did, for me, just implement it, because for me it's, yeah, it's still decent, even though it's the worst one. It's still profitable, right? And strike rate is above 50%, so I'm happy with that. You can say here, right, 50% strike rate. Yes, it's not great for GU this year, but yeah, it's up to you if you want to add it or not. It's not a big deal. And yeah, that are my stats. I don't have anything more to say. Like, this folder, Excel spreadsheet, sorry, is absolutely incredible. So Matt did a brilliant job. I hope you guys take value from it. And yeah, this is everything that I did to add a small variable on top of something that is already working, guys. You already know the process, and yeah, this is how you should approach trading. This is a business and you should treat it as a business. If you guys like this video, let me know, and also if you have any questions, send me a message. And yeah, bye guys, see you on the next one.